time now to get an update on the day's business news. And cryptocurrency markets have been in turmoil in recent days. The combined market value of all digital coins now a third of the size it was just back in November. Yuka Roy from our business desk is here to tell us more.
Well, Sharon, what we're seeing is something like a run on the bank with investors just simply taking flight and panic selling digital coins to get their real money back. Now, cryptocurrencies are known for being volatile, but this week the plunge is caused by so-called stablecoins that have been created precisely to avoid this volatility. Now, one such token, called Luna, has fallen from a high of $108 last month to below 1 cent of a dollar. Terra, that's coupled with Luna, also plunged. And Tether, the largest cryptocurrency by volume that's pegged to the US dollar, dropped, spooking investors further and prompting the US Treasury Secretary to call for new regulation.
Although I can't say that they have reached the scale right now where they're a financial stability concern, and we're seeing Terra having broken the buck and Tether under some pressure as well, which is the largest one. I wouldn't characterize it at this scale as a real threat to financial stability, but they're growing very rapidly.
So what are stablecoins? Well, as the name suggests, they are meant to be protected from extreme volatility that's often associated with other digital tokens like Bitcoin. They do this by being pegged to external assets like fiat currencies or commodities like gold. The idea is that people can keep stablecoins as secure digital assets, which they can then use for investment or buying other cryptocurrencies. Now, the main types of stablecoins are ones backed by real assets, most commonly by fiat, like the US dollar and the euro, but also by cryptocurrencies or commodities. The other is called algorithmic. That's slightly more complicated. It uses a program to control the stablecoin supply. In the case of Luna, that's collapsed. It's coupled with its sister currency, Terra USD, that is pegged to the dollar. It's designed so that if Terra's price falls below $1, traders can burn or eliminate the coin in exchange for Luna. That's supposed to reduce supply and hence raise the price of Terra. And when Terra goes above $1, the traders can burn Luna to buy it back. But what happened this week was that investors just lost confidence and rather than buy Luna, just panic sold it, reminding everyone that even stablecoins can be, well, extremely volatile. Let's move on to global financial markets now. Asian shares mostly bounced back from Thursday's sell-off, with Tokyo and Hong Kong up more than 2%, as you can see there, as Seoul also up above 2%. This as investors bought the dip, cashing in on discounted shares. Now, as inflation fears continue to grip global markets, investors are moving more and more of their assets into safe haven currencies. The US dollar is hovering near 20-year highs against other currencies. The euro this week has dropped 2.6% against the dollar. The summer's fast approaching, and after months of COVID doldrums, many people around the world are eager to travel abroad with the easing of restrictions. However, the airline industry is dealing with another major headache. Thousands of flights have been cancelled as many airlines are struggling to have enough staff to fly their planes. Shirley Sitbon reports.
For 2 long years under COVID, airlines expected anxiously passengers' return. Now tourism is picking up, but apparently too fast for aviation professionals. Across the world, airlines are canceling flights. British Airways, 16,000. Scandinavian Airlines, 4,000. Disruptions due to a massive shortage of staff.
Well, what we're seeing at the moment is very strong demand. Now, I think the challenge is how much of that is just pent-up demand that will then dissipate as we go through the year. But all the indications we're seeing at the moment is that, a slight increase in fares that we've already witnessed is not deterring people from travelling. And even the disruption that we're seeing at the moment is not deterring people.
When COVID started, airlines had to fire thousands of personnel, from security officers to cabin crew to pilots. For months now, they're rushing to rehire, but recruiting is not their only challenge. It takes 4 months to integrate staff. and there's an acute shortage of instructors and simulators needed for training. EasyJet found one way to keep a maximum of flights going. They've scrapped 6 seats in some of their planes, which allows them to cut the number of crew members. Other companies have chopped in-flight services. If passengers want to eat, they'll have to bring in the food themselves.
Certainly makes you think of travelling abroad with the weather like this, but...
Exactly. It's a bad timing for the airlines just after the pandemic.
Yeah, it seems to never end.
Yuka Roy, thank you so much for joining us from the business desk. Do stay with us here at France 24. We'll be right back.